All right, good morning, everybody. Pretty interesting weekend. A lot of information coming through. So, Russia's sending troops into a part of the Ukraine that says it's not part of the Ukraine anymore. So he's kind of trying to keep his word and saying, we're not invading the Ukraine. What are you talking about? So it's a really weird language that we're hearing on TV. You know, when it was the Iraq war, there was military intervention, a barrage of missiles. This all just seems to be a lot of talk. The market is still waiting on any kind of change in the rhetoric. These sanctions are going to hurt global markets more than it seems like it's going to hurt Russia, but the EU and the US are working on more sanctions. Kind of want to just keep your eye on the news through all of this. It kind of throws technical analysis out the window, right? It's very much like trying to trade an Econ event or an earnings. No amount of technical analysis in the world is going to tell you where the candles would go if a company comes out and says we're broke, right? So the news is kind of in control. So we're looking at Bloomberg, 5 things you need to know. It's free. They'll email it to you. You don't have to sign up to get it. You don't have to sign up to Bloomberg to get access to this. You just have to sign up for their email. It's a short read. It comes in every morning. It's worth checking out. They kind of give you a perspective of what's going on around the world. There are days where I look at it and there's really nothing in there, but you know, you won't know until you look. So they cover a little bit about what's going on over at the Ukraine. They talk about commodities, gold moving around, which was a little bit of a surprise when they were talking about Bitcoin as well. Seeing Bitcoin down last night over 7%. A lot of the Bitcoin traders that I know aren't traders at all. They really don't know anything about trading, and they only go one direction, long. They don't short. They don't have any way to go short. Their platform won't even let them go short. The only thing they can do is buy into Bitcoin and then, close the trade afterwards. And of course, it's been just getting whacked. So all of those wannabe, I'm a trader Bitcoin players who really aren't traders at all and don't have any clue how to do anything also don't have a platform that will let them do it, right? They can't short it because they don't have the size to short it, or they don't have an access to a way to short it. And so most of the traders that I know that are Bitcoin traders aren't doing anything right now except complaining that they can't trade Bitcoin because it keeps going down. Of course, a lot of them are bag holders too. So then they're not trading at all. They're just holding into a losing position and hoping eventually maybe it comes back again. We do have some Econ this morning. If you are wanting to trade Bitcoin, besides just buying and only buying and being stuck only going long, there are Bitcoin ETFs. BITO is the Bitcoin ETF. That would allow you to trade it like stock. It would also allow you to trade options on it. Then there is the Smalls Exchange, which requires very little in buying power, and you can go long and short with leverage. And that would give you a way to participate in the Bitcoin market besides just buying it and hoping that it goes up. Take a look at Market Watch. go to the calendar. 9, 9:45, 10, 11, 11:30, and 1. As you can see, we have a very full house today when it comes to an economic agenda, right? So not only do we have any impact that could come through the wire on this situation in the Ukraine, we also almost every single hour have another form of economic data coming out. These additional auctions at 1 o'clock are critically important. So don't sleep on them. Don't think that they're not something that you need to pay attention to, because they absolutely are really important. I can't tell you how many times I've seen the market completely change from a sideways market to a strong trend, or from a strong trend to a sideways market, because of these notes, these additional auctions. Right? So they absolutely completely matter. Watch the clock. It's one of the best indicators that you have. We were doing a little work yesterday looking at the open interest in the last few days on the futures, and it increased significantly when you consider that we're getting near the end of the month, and this is usually where open interest begins to go down, because we're getting ready to rotate out of the current series and into a new series, right? We're still in the March series, but it won't be long now before we roll. And normally what we would see is a decrease in open interest. And I had a few people over the weekend asking, who is buying this? Right? It was going down a little bit and then it was being bid up. And that question really shows a lack of understanding of what it is that we do as traders. Right? So you got to quit trying to think of a retail trader from your own perspective, because you're not trying to do something on your own, right? You're trying to piggyback off of what the institutions are doing. If they're driving the market long, we try to go long, right? And if they're driving the market short, we try to go short. So you got to quit looking at it from the point of view of what person is buying this thinking it's going to go up, because that's not what they're buying it for. If the open interest was increasing on Friday, and then it implies they're going to go long or short, because you go in and look at the volume from Friday, the volume was really heavy to the downside, right? It was short volume. So there was a whole lot of positions opened short Friday. Well, who's buying it, and what does it look like when you're in a short position and you want to close that short position? You buy to close. Who's buying it as we're going down? People that are already short and want to close their short position. That would just be one group out of a lot of groups that would be buying it as it's falling, right? Want to take a look at the VIX? You can see that the March series is really elevated. And as we go farther out in time, the volatility gets lower. This is backwardation. It's very important to recognize when we're in backwardation, because it affects so many things, right? Options pricing models is just a part of it. The way that the algos approach what they trade and how they trade it is greatly affected by this. All right. So it's a real big deal. We are up off of the lows. We are higher than where we closed Friday. So it shows that we're still negative. If you're looking at change percent, this is just a thinkorswim issue that has to do with holidays and everything else. This market that we had here, Sunday night open through Monday into the holiday, and then we closed and then opened back up again. You're going to see a lot of places act like that this area doesn't exist, right? They're just going to consider that it's not there at all. And that would bring us back to Friday's close, right? And from that perspective, we're still down below Friday's close. And I know it may not make much sense to ignore data, but a lot of broker platforms struggle with dealing with holiday and shortened hour activity, right? And what they'll often do is combine the candles. It's weird. It doesn't really affect anything on the grand scheme of things, right? You still want to mark out your major pivot points: intraday high, low, close, Globex high and low of the previous day. those institutional pivot points, should we run into them, are still going to provide the same structure that a regular pivot point would always provide. But really look at the platform and kind of think it through. If we opened down here and we closed here, why does it still show that we're down a dime? You see what I mean? Like, you got to really recognize the fault and the limitations within the brokers that you use. We were trading last night, calling out targets. First target hit perfectly. That's why we do the same things over and over. The target was to close the gap. What did we do? We closed the gap. Right? And that's all we did until news came out later on, way after I was asleep. Or ran up to the next level. What did we do? We closed the gap, and that's all we did. Close the gap. Looking at the expected move for this week, even in a shortened week, here was the range from last week. This is a 4-day week that we're looking at here. Take this box and set it in there and really kind of think about this for a moment. The size of this week's expected move is greater than last week's expected move. Okay. And yet it has 1 day less. The amount of volatility that has changed in the S&P is very significant. This isn't just looking at it and saying, oh, yeah, it's a little bit bigger than last week. It's a lot bigger than last week, and there's 1 day less to measure, right? So this box, imagine if it really was a 5-day box instead of a 4-day box, how much bigger still it would be, right? So the implied volatility has gone up significantly in the futures market. I was reading an article over the weekend that talked about we're in a 3 sigma move. A standard normal market move right now is around a 3 standard deviation. That's massive. And in history, every time we get into a market that has a 3 standard deviation or a 3 sigma move on the books, like what we're dealing with right now, the outcome has never been good. Right? It's been these massive, violent shifts within the marketplace, wiping out a lot of these gains. Basically, like a great reset. My target is still 4,000 to the downside. That hasn't changed. It's been that way for a long time. For anybody who's in the put trades with me, you don't knee-jerk reaction out of those put trades. They're swing trades. Right? As long as the S&P is still holding above 4,000, the put that you sold at 4,000 is still good. I've got another one sold at 36. Obviously, it's still good. We're still above 36. So the P&L in that put may look nasty. It may show that you're down a significant amount of money, but 4,000 is your break even. Not really your break even, but it's a good visual for you, right? As long as we're holding above 4,000, you're fine. So don't let that P&L scare you out of your position. Depending on how much volatility gets pumped in here today, we're very likely going to roll that put anyways, just because we want to take advantage of the swollen value and sell it. Yeah. The analogy is, would you rather be the person who sells Pepsi at Costco, or would you rather be the person who sells Pepsi at the football games? And if you've ever been to a sports game, you know how much it costs for a freaking Pepsi, right? Well, I'd rather sell Pepsi at the sports game. Or the Nasdaq. Same situation. Come in and look at the box. It's a very simple thing. Just to, it doesn't have to be perfect. Just draw a box. Look at the last 5 days. That is the calculated expected move. And this is the new week calculated expected move. Now, on the Nasdaq, the box is a little bit smaller. I still argue the volatility went up. The box is a little smaller, but it's only a 4-day box. So same thing. We had a gap close. We're then targeting the next gap close from Friday. Not quite there yet. It shows that we're down more than 1/4%. But obviously, if we closed here yesterday and we opened here last night and we are way up here, we can't be down on the day if we're looking at yesterday's data. Right? It just doesn't work that way. So the broker is basically ignoring this data and says that we're down 1/4% because of where we closed Friday. In the grand scheme of things, it won't matter, right? It's important if you're a trader like me looking at watch lists that your watch list change percent may be wrong depending on your broker. All right, so last week we started building out short positions with their own individual hedge. And before I get into that, let me look at the rest of the futures so we kind of got an idea. Let's see, gold and the devil's metal had a nice little pop. The dollar had a nice pop. And the bonds were looking really good. And as you can see, that went to hell, right? So the bonds dumped, the dollar dumped, even the VIX dumped. We had a little bit of a knee-jerk reaction back to the upside, and everything right now is still dependent on what's going on over in the Ukraine. If the Iran deal goes through, by the way, guys, you want to be very careful with energy, right? Because they're talking about an energy crunch if we sanction Russia in a way that limits their output of energy around the world. Well, if we get the sanctions removed from Iran and we bring them back into the global stage where they can start exporting oil again, they'll be able to cover a lot of that crunch. Okay, so really keep your eye on the news for anything to do with that Iran deal also. This was a consistent, persistent move here, right? There was like nobody going against the market. So this is what we talk about when we mention a clear and consistent message in the market. It's like one-sided trading. Now, granted, a lot of times you can't see it until you look back, right? When you're in the middle of it, candle by candle, it's really hard to try to identify a clear, consistent message in the market. But it should be a goal from any day trader out there. Learn to recognize this as soon as possible. The sooner you can recognize it, validate it for what it is, the better you can participate in it with some conviction. Well, that's a really great example to go back and study. It's the ZN, the 10-year. So when it comes to the dollar, I think the range pretty much speaks for itself. We're in the box. We've been in the box. We had a slight exit of the box on each side, but otherwise we're just still holding right in the middle. It's significant if we leave the range. Otherwise, as long as we're staying inside that range, then it's just business as usual. Same thing with the ZN. We're off of those dangerous critical lows, but we really haven't been able to get back up through this box. We're going to start looking for, we've got the beginnings of a reversal pattern, but we need to start seeing it come through, right? We need those higher lows. So the main thing right now is to see it maintain inside this box because we're back inside it. Critically important. Keep your eye on the bonds, the dollar, the VIX. Let that VIX be your confirmation of these breakout plays. All right, so last week we started talking about building out short positions and then individually hedging them so that if the market does begin to rally against us, we can just go in and recoup our money from the other direction. The first trade that we added to that style was Microsoft. Put this one on Friday afternoon. We bought a put. Didn't sell a put, we bought a put, right? And you buy a put when you think the market's going to make a big move to the downside. I don't know that it's going to make a big move to the downside, right? I just know that we're sitting at these critical lows, and that should this support fail, then it's a long drop to the next support level. This is a really good time to sell a put, or excuse me, to buy a put, because if it fails, this is a good time to be in it. However, that's not a good way to trade, right? We just, I think we're going to break down here. Nobody cares what you think. You want to be able to put something behind that thought. So if I buy a put and I spend $2,000 of risk buying a put, I can't just buy that with $2,000 and hope it all works out. So the plan is, if Microsoft bounces on this support and begins moving back up in the other direction, we're going to sell puts all the way up. Now, what we've been doing is selling calls because the market keeps falling, and you want to sell calls when the market's falling. That way you're on top of the market as it falls farther away from you. It makes perfect sense, right? You're not getting challenged that way. Well, if this goes against us and starts to run to the upside, I don't want to be in short calls because it's going to chase us all the way up. We're going to have to keep rolling those calls and rolling the calls and rolling the calls. And we may make some money, but it wouldn't be very good money because we would be reacting and responding to being challenged over and over and over again. So flip it over and take the other side. Buy puts down here at this structural support level. If it bounces here, runs to the upside, we'll just sell puts all the way up, right? We sell a put and it continues to run up. We sell a put and it continues to run up farther and farther away from us through the move. By selling the puts, we can recapture the money spent on the put that we bought, right? So this way we can trade with an idea that if we're wrong, we're still not going to get hurt because we've got a way to hedge the trade and make money back on the other side of the trade. It seems to me a hell of a lot better of a plan than just going out and spending $2,000 and hoping it all works out. Hope is real, but hope is not a great trade strategy. This is the first one that we're targeting, but it's not the only one. Google's going to be another one. It's still up significantly on the year. It really hasn't been whacked if you think about it compared to a lot of its peers. This one has plenty of room to move. Now, the only problem with trying to use Google in the same situation that we were talking about with Microsoft is it's not $2,000, it's $20,000. Yeah, that is a little rough, right? So not quite sure how we're going to approach it with Google. Very likely it's going to be either out of the money options, which would give us a chance to use something cheaper, or maybe some verticals, right? The problem with the verticals is you can't hedge them the same way. So I don't know, maybe like a broken wing butterfly, a back ratio trade. We're still going to be looking at Google one way or the other, and it'll be for the same concept. If it breaks structure and heads to the downside, this thing can really move. We're talking about going from 2,500 to 2,000. I would really like to participate in that move. But on the other hand, if it actually grabs some support here and starts to rebound back up to 3,000, I don't want to get my face ripped off. So we're going to be looking at mega cap companies, a lot of them tech, a lot of them that have still maintained their position even through this negative market that we've been in. I mean, you can see Google got whacked, but it hasn't really sold off yet. Right? It's only down a little bit. So that's the things we're going to be targeting. Speaking of targeting, right now there's the big debate: growth versus value. So a lot of the capital rotation that we see going on right now is in those two forms and in those two fields. There are ETFs for that, right? There's an S&P growth and there's an S&P value ETN or ETF. So, utilize those, even if you're only utilizing those in a price ratio indicator, so that you can literally look at the indicator on the day and say which one's doing better, value or growth. It really is that easy. Yeah. All right, so we're looking at Trend Spider here. Sectors on the day. Not much of a surprise. BITO, that's that Bitcoin ETF that I was telling you about, is still down 6%. But that's actually better than where it was the last time I looked at it. So a little bit of bump to the upside. Airlines, emerging markets, everything's down, right? Everything got whacked pretty good. But natural gas, energy, oil, silver, even a little bit of healthcare and industrials. So we want to look for those start turning back around, right? When on days like this, when we can't lean on the S&P sectors, we got to go in and this is where we got to be stock pickers, right? We got to go in and pick our own names based on our scanners and our watch lists. There's a lot of really great energy names to trade. Energy has a cost basis that can suit just about any account, right? Things like rig that are less than $5, very liquid options, great product to trade for a small account, all the way up to really expensive stuff, hundreds of dollars, right? So really liquid, very active. It's bullish, kind of covers the gauntlet for anybody out there looking to day trade and are stuck on the long side. But I'll be keeping my eye on a lot of the financials. Um, we were going to buy a put in financials Friday and didn't get to that because Microsoft took up too much time. But we're very likely going to be buying a put in one of the financials today, and we're going to pick one of the top liquid names on the list: JP Morgan, Wells Fargo, Bank of America. Very, very liquid products, highly traded, uh, not too expensive, right? Less than $50 on some of those names. The point is, there's plenty of things out there worth trading, especially to the upside if you don't want to short from the hole, right? I don't blame you. Shorting from the hole isn't a really good idea when we're already at those lows. But notice with Microsoft, we weren't all the way at the lows yet, right? I didn't want to wait for it to get all the way to the bottom and then break support and then get in. I want to start going short before it actually gets to those lows. So there's plenty of names to trade this morning. Try to attach that to something on a daily chart to narrow down your list of suspects for things to trade near the open. Right, red to green, trendline breakover, inside day breakout, IX10 pattern, something on the daily that gives you more conviction to have it on your list in the pre-market. All right, so the sectors that we haven't looked at, because they're not really old school legacy sectors, got the crypto list, which no surprise, really beaten down. The electric vehicle market, and basically everything in there is just getting destroyed. The only three names that are up this morning are the ones that were down Friday. Marijuana sector, which is mostly down. And that about covers it for any of the more modern sectors that aren't a part of the S&P. So when we come in and we look at the heat map set to the S&P 500, you want to look at pre-market change percent. Use the filter to get rid of the 500 names, knock it down to the biggest market cap names closest to 100, right? It's a little tricky to do some mornings. We'll just get close enough. 91 is close enough. Adjust the color scheme so it responds a little quicker. This is a really easy way to look at 100 names, right? It's just a snapshot, a real quick grasp of the marketplace. Thinkorswim has this too. Thinkorswim's just doesn't respond in the pre-market, right? So it doesn't do you any good to go in and look at Thinkorswim's heat map before the market opens. Now, once the market opens and starts moving around, this is a really quick way to identify names that are moving around, and you can put your own watch list in this on Thinkorswim. Right. So when we load up the most liquid names of January and put it into a heat map like this, we can immediately see who's running, who's not, and then focus our effort and energy trading those products. Right. Look at energy minerals this morning. Yeah. Right. So that's the S&P. A significant whack to the downside across the board. A couple of names in the electronic technology. Raytheon, Lockheed Martin, not Boeing though. Interesting enough. So swap out of the S&P and move over to the Nasdaq. Same thing, pre-market change percent. Adjust the color scale. Communications is doing good. Starbucks, Siri, Walgreens. A couple of chip names. The distinguishing difference between the Nasdaq 100 and the S&P 500 is the Nasdaq 100 does not have financials in it. That's why when we go into the screeners and we start asking questions like how many names are down this morning or how many names are up this morning in the Nasdaq, we want to be able to take a look at those names and identify what sector, subsector, or industry they belong to. So right now we're looking at the S&P 100, and we're asking how many names in the S&P are down at least 1%. That's a significant move to the downside. 14 names, and a lot of that is retail. See Nike on the list, Home Depot. Then we've got some tech names in there too, and some chip industry in there. NVIDIA, General Motors, PayPal, Facebook. Is kind of a hodgepodge, right? All kinds of different things in this. So that covers the S&P. I want to ask the same question out of the Nasdaq. How many names in the Nasdaq are down at least 1%? 29%, right? 29% of the Nasdaq is down 1% this morning. That's a significant number of companies in the Nasdaq. A lot of these are technology services. There are a few retail, a couple of healthcare, and then electronic technology is the other really large sector. So when we're looking at companies with weekly options, you can see there's a significant amount of companies that are up more than 1.25% this morning. That's going to be where I would focus my attentions, not trying to trade the names that are already up 2% or 3%, but using those names to point out what sector or what industry I would want to move to the upside, right? But very likely I'm just going to focus on energy more than anything else. Energy and finance are going to be the two that I'd want to dig into quite a bit. Maybe a little bit of technology if I still want to add some shorts to kind of balance out the portfolio. Right? When you're thinking about beta weighing, I want to keep kind of sitting in the neutral zone, right? So I may need to add some negative beta, and I'd be getting that out of technology. That's what I got for you, guys. Be careful, be safe. Really watch the news. It's not going to be the technical analysis today, right? It's not going to be what we see in the candles as much as what it's going to be coming through the wire and coming through on the tape.